Well, hello, this is Crypto Isaac with another video, and today I'd like to share with you something pretty interesting that I found out and which makes a lot of sense to me. But first of all, let's look at what Bitcoin is doing. As a quick update. And yesterday I tweeted that we are at this region of the fractal and expect a drop all the way down, and we are here right now, right? So true enough, what happened to Bitcoin? Bitcoin is dropping like crazy. So expect it to go down all the way to maybe 7,400 before an attempt to bull run. Okay, that's just a short update. But today I'd like to talk about something pretty interesting that I found out from lots of books, from talking a lot to a lot of successful people that has made money from investing. So let's jump into it. How to successfully invest in cryptocurrency, the real long-term game. When we talk about long-term here is 5 years, 10 years, 20 years. Put that time in your mind. It's going to be a long haul. So yeah, I like to touch on market cycles and make sure everyone understands that this is a true phenomenon. Right now, we are coming out from a massive bull run, a 2-year bull run in Bitcoin, and now we're heading in with the possibility of heading into a prolonged bear market, and it's a normal thing apparently, called market cycles, where you have this oscillation, bull run, bear market, bull run, bear market, right? So this is a market cycle chart. So we have, I'm pretty sure lots of new investors got into cryptocurrencies because, you heard from a friend that, he or she has made a lot of money. And the next reason why you got to know about Bitcoin is maybe because you've read it in the news, seen it in news channels and stuff like that, saying Bitcoin's at $10,000, Bitcoin's 20,000, whoa, and then you want to be part of that action, so you put in money then. So that right there is media attention. What's happening? So that right there, you are entering at this phase. If you're lucky enough, you go into from this area. But most people would be entering somewhere here, and then you know what happens next. So this is a normal occurrence in every sort of market. It's a huge economic question, so I wouldn't go into it so much. The smart money has already entered very long time ago. They've made their money. They've sold it. They've seen this before. They've sold it and make profits, and then all the new investors like myself and everyone else are trapped in this great crash. Damn, what's wrong with my tongue? Okay, so this is Bitcoin, and just look at it. It's very similar to this, right? Of course we don't want to see Bitcoin crash to 1,000, but there is a possibility of doing that. So you need to understand that market cycles do happen. A lot of people saying cryptocurrencies are different, but it is a market, and the normal economic terms would apply as well, because it's all buying and selling as well. So market cycles do happen. There will be profit takings, there will be panic selling, so it will happen. Prolonged bull runs and long bear markets. So please remember this when you want to invest in cryptocurrency. Okay, so how to beat the market with no stress? I emphasize on the term no stress, and of course, in my opinion, because I've only started doing this, because in the bear market is where I start to really study how investments work, how to successfully make some money out of a market. So I think, I'm not a financial guru. I haven't succeeded yet, but this methods makes a lot of sense to me, and I think it's a really no stress way of investing. Okay, for new investors, new investors would always follow the hype, because you're entering with no prior experience to investing or playing in the crypto market, all right? You're always following the hype. You're following this friend of yours that said, buy NEO, for example. And then you buy NEO. But your friend has already bought NEO much earlier. And then you'll be buying at a premium. You'll be buying at a much higher price than him. And then that really increases your risk because you're buying at the top. For new investors, there's usually no time to do your own research, right? You have your normal job, you have your families, you have your hobbies, and there is really no time to do your own research. Reading white paper, um, investigating the team, reading their blog posts or whatever. And there's really no time for new investors. Thirdly, you would FOMO. FOMO means fear of missing out. You see a cryptocurrency that's increasing like crazy, and then you put your money there, and that is the first mistake you'll probably do. And attempt to handpick winning coins. This is a very important part. Okay, look at this here. This little chart that I included here. All these are the zigzagly lines. Those are altcoins, and the one that's constantly rising up, that is Bitcoin. So if you were to handpick winning coins, basically you do your own research and stuff. You think this coin will be a massive boom, but look at the statistics right here. A lot of the coins are. This is a mess right here. A lot of the coins are going to go down, right? They're going to go down more than. The likelihood of it going down is higher than actually investing in Bitcoin. So you are going to try and pick out one of these lines and hope for the best, right? That's why lots of people said hold Bitcoin, because it is always constantly rising, right? So you are handpicking one of these things and hope that it would go up. Probability says the odds are massively against you, so why pick such odds, right? A few examples I would give is BitConnect. Everyone knows what happened to BitConnect. It crashed, and it was a $3 billion company, and $3 billion consists of lots of people's money in there, and it just disappeared because of that. Well, it didn't disappear, there's shit happening with them, but you would lose your money just like that if you were to put all of your savings into BitConnect because a friend told you to, or because a YouTuber told you to, and then that's it. It's just gone just like that. Z Classic is another good example, because I do have friends who only invest in Z Classic back in December. Great, Z Classic increased. Z Classic did 100 times. That's massive returns. But for new investors, you do not follow the news. You are not up to date to what's happening, and within a few hours, it just crashed down. And the next few days, it just went back crazily down. It's 90% drop. It was crazy. Lots of people do lose a lot of money. And NXT, I do not want to go to NXT. It's a bit tedious. Okay, so remember this: as a new investor, you are doing this, and it's quite dangerous, right? So what I'm going to talk to you about is index fund. What is index fund? Well, I'm not going to go too much into detail what index fund is. Please do your own research and look up Google index funds. What do they do? Okay, the most successful investment vehicle would be Vanguard, by Jack Bogle. So index fund essentially is it allows you to own the whole market with just one investment. Okay, even Warren Buffett said, by periodically investing in an index fund, the know-nothing investors can actually outperform most investment professionals. Warren Buffett said this. He is famous for handpicking winning investments, right? But he is just 1% out of the 100. You're playing with very, very little odds. So he said he's given the best financial advice ever by saying investing in an index fund periodically. Okay, index fund is passive. You do not need to keep looking at your portfolio, but you can for fun. And then you have to do a monthly contribution. Let's say monthly salary. You put 10% into it every month. You have to be very disciplined about that. Okay, index funds are highly diversified. Okay, like I said, with one investment, you could actually own the whole stock market. This is what Vanguard is known for. Okay, and it's time resistant. What is time resistance? Basically, look at this. Okay, this is the stock market and this is the crypto market, right? So, first of all, this is 100 years. Look at the trajectory of the whole stock market. It's constantly going up. So if you own a part of the stock market, let's say somewhere here, if you just hold it for another 20, 30 years, you would go up, you would make money. Okay? So Bitcoin or cryptocurrency market is only at its 5 years since its birth. So we're just here, and everyone who I believe everyone who's watching this video has invested in cryptocurrency. You believe that blockchain is gonna be here for the long term, and it's gonna continuously going up, right? So yeah, index funds capitalize on the constant upward trajectory of the market. So you could say, okay, I own a big ton of shitcoins. True, but you are capitalizing on this. But you are a new investor. You do not have time to do your own research. You do not have time to follow what's good out there, what's happening. So you cannot possibly keep up with what most full-time crypto traders do. So why go through the stress, right? Okay. Crypto index fund. So I managed to found 3 crypto index funds. There might be more, so let me know if I missed out anyone. So there's Crypto 20, there's Chain Fund, and there's Economy. Chain Fund, I have a personal bias with Chain Fund, and I'll tell you more about it later. Crypto 20 is, I think, the first one. So essentially, you just buy one C20 token, and you would probably own the top 20 cryptocurrencies. So index funds allow investors to own the entire market from one platform or token. So token is Crypto 20, and platforms are Economy. So the thing about Chain Fund, I just have to share with you guys. Chain Fund was founded by one of my close friends. We've been working in a different industry for 4, 5, 6 years, and he's honestly one of the smartest people I know. And he founded Chain Fund with a crypto millionaire who has made shit ton of money out of crypto, and then they formed. My friend did the blockchain tech side, and the crypto millionaire is the one going to manage the fund. So I've met them before. I've spoken to them. I've drank coffee, had lunch with them, and they really are sincerely interested in helping new investors invest in cryptocurrency. Okay, so this one, I just letting you know, I have a personal bias to this. Okay, crypto index funds. So what I said is that it allows investors to own an entire market. So basically, with Crypto 20, you can find out all this on their website. So it's not like hidden or anything. So let's say you own some C20 tokens. What that C20 tokens mean is inside that C20 tokens, you have 10% of Bitcoin, 10% of Ripple, and etc. etc. So you would own all this coin from just one token. This is Chain Fund's one of Chain Fund's portfolio. It has Bitcoin, Walton, Neblio, all this coin, Icon, Zen, Salt, Raiden. So all investing in Chain Fund, you would own all these coins. Now, Economy is a bit different. Economy has, I think, 8 to 10 different portfolios you can choose from. So from those investments, you could choose which ones align with your personal tastes. So let's say you buy a portion of blockchain index, right? So inside that index, you have Bitcoin, Ethereum, Dash, Monero, Icon, all these coins, and this is the index weight. So 15% of your money would have Bitcoin, and etc. etc. Or you think this one seems more fun, the William Mogaya High Growth Crypto Assets Index. So in this index fund, you have Ethereum, Nexium, Bitcoin, Steam, all these different coins, and so all you need to do is invest one time, and you own all these coins. The fund managers would handle your portfolio for you. So do your own research, see which ones makes any sense for you. So the most important thing about having a time-resistant portfolio, right, is rebalancing. This is where you would consistently make money in a bull market and also mitigate risks when the market isn't so favorable. Rebalancing is the most important thing. So let me just get out here. Okay, this is a quick and dirty example. So I'm gonna use a $1,000 example. So basically, you have $1,000 to invest. You invest in a top 10 cryptocurrency. So obviously, it's 10% each with $100 each coin. So this is your portfolio, right? So let's say the market did this. Let's say EOS did a times 10. So your portfolio now is worth $2,000 because times 10 of $100 in EOS, it will be $1,000. So you would have $2,000. So assuming Bitcoin, Ethereum is just stagnant, they're not increasing, they're not decreasing, right? So this will be the allocation of your portfolio, 5%, and then EOS with 50% because it moved so hard. So what rebalancing does is it does this for you. Okay, so EOS mooned 50%, and then you evened out the percentage again. You strive to achieve these allocations. So you strive to make cryptocurrency your portfolio into this allocation again. So now, once you rebalance it, you have $200 in Bitcoin, $200 in Ethereum, $200 in Ripple instead of this, and then your entire portfolio will be worth $2,000. But this doesn't really happen, right? The rest of the coins are stagnant and EOS just moon. Everything will be increasing when the bull market hits. So if you rebalance, your entire worth of your portfolio would gradually increase. Of course, it's not the same if you have, say, $1,000 in EOS and you times 10, you get $10,000, but that is essentially gambling. You don't know that EOS is going to do that. What if Litecoin is the one that's going to do that? So diversifying and rebalancing is a key component of having consistent profits. I hope this really makes sense because it's a really quick and dirty example. So let's move on. So the advantage of having a crypto index fund in your portfolio is, let's say, for example, you have a portion of your portfolio in chain fund. So you have a portion of portfolio in chain fund means you have Bitcoin, you have Walton, you have Nebula already in your portfolio. So passive plus active funds. Passive means, it's being managed by someone else. You have all these coins, and you free up time to find hidden gems. Let's say this portfolio does not have, say, TRX. You like TRX, so you buy TRX. But knowing that this portfolio has all the coins that you need to beat the market, and to experience constant growth, consistent profits. So you find other hidden gems like TRX or Dragon Chain, all these big coins that all these huge coins that has huge upside. So you have your passive one that is going to constantly increase, and then you have your active funds. Let's say you're a crypto enthusiast, you want to do research, you want to read white paper. This frees up your time. You do not have to worry about, I need some Ethereum or some Bitcoin to hedge against my funds. You already have it in an index fund. It's fine. So you can free up some time. You can buy all the other coins that you think might moon, with the peace of mind that you have a constant money-making machine right here. Okay, it gives your portfolio a more diversified character. You have the low-risk ones in the index funds, and you have the high-risk ones, which are your hand-picked cryptocurrencies. So that way you beat the market. You stand a higher chance beating the market like that. Let's say if your gems decide to crash or anything, you wouldn't worry too much because you have all these solid coins that the fund manager has put in due diligence to ensure that it's going to moon someday or whatnot. So this is an advantage for having a crypto fund. Okay, next. This is all you have to do to successfully invest in cryptocurrency. 10% of your monthly income to index funds, and another 10% to your actively managed portfolio. So if this... Oh, what am I doing? Yeah, sorry. So if this ensures your success in the long term in the crypto space. Well, this satisfy your need to gamble. Well, I wouldn't call it gamble, but if you intend to become like the Warren Buffett or something, you think this coin's gonna explode, so this is where you would play with that money. So if you do invest in index funds, there's only one chart you have to look at: a total market capitalization chart. Okay, because if you invest in blockchain, we all know that blockchain is gonna stay with us. It's a market, and it's going to rise eventually in 5, 10, 20, 30, 40 years. It's gonna rise. So having an index fund truly capitalize that fact that it's gonna rise. It's gonna always rise, and the demand for blockchain is there, right? So I hope you guys learned something from this video, and I hope it would help you just reduce some risks and maximize some profits on your portfolio. Well, you can end the video here, but I just want to add one last thing, which is mass adoption. Okay, so when we talk about mass adoption, lots of people have this misconception that mass adoption means, okay, everyone's going to use Bitcoin. We're not going to use banks. Banks are going to use Bitcoin to transfer their money, right? And any person out there, when they want to send money, they send Bitcoin instead of fiat. But in my opinion, that is true. That is massive adoption. But in my opinion, what's going to help us make a lot of money is when the real massive adoption happens. Is when you have retirement funds, you have bonds inside, you have currencies in the cryptocurrency space. So this is the size of all stock markets. This is all where the money is, as in the goal. What we want massive adoption is cryptocurrency to take a chunk of all this money and into the crypto market space. So massive adoption means, in my opinion, is when everyone is going to allocate a part of their wealth into cryptocurrency. That is what the real massive adoption would do to your portfolio. We want traders to start trading millions and billions of dollars into cryptocurrency market. We want them to get out of the futures market. We want them to get out of the Wall Street and start trading in cryptocurrency. We want that action. We want the big money people to start playing in the cryptocurrency market. That's when we would see massive adoption. In the US, you guys have 401ks. In other countries, we have all this governmental bodies that help employees save. Like, for example, in Singapore, where I am from, we have something called the CPF, whereby your monthly salary, you have it's a must to allocate part of your salary to this fund, and this would be your retirement fund. And what we want to see as massive adoption is when this government people put all this, allocate a portion of all this wealth accumulated by the people into cryptocurrency space. That is the real massive adoption. It's not so much of regular people start using Bitcoin instead of PayPal. Those sort, because those things will still stay on. All PayPal need is to just integrate blockchain into their system, and that's it. It's gonna beat Bitcoin already, because massive adoption has already happened for them. But we want this to happen to cryptocurrencies, and I think it's just a matter of time when they allocate a portion of all this money into cryptocurrencies. Just a few blocks could really make cryptocurrencies moon. So with an index fund, you are sure to capitalize on that. Okay, so I guess that's it, and I hope you guys learned something. Maybe consider having an index fund portion in your portfolio. So this is Crypto Isaac, and I hope you guys learned something today. And if you guys like what I do, please just subscribe and leave a like. Okay, and I hope you guys are doing fun, and the bear market isn't fun, of course, but we will pull through anyway in the long run. Okay, so have a good week ahead, guys, and I'll see you guys again in the next video. Thank you. Bye bye.